over to first the technical side. Fundamental, you guys already have the market update from yesterday. Some of you guys joined in as well. But we'll move over to the fundamental side in just a little bit. The big day, or the big catalyst today is going to be the FOMC meeting minutes. So this morning we might get some choppy moves, but we might get some better scalps as well. And then moving into actual news release, we can do a Discord session where we're still going to have our alert set up and everything like that from this session here. Alright, so we have, starting off, the weekly bottom wick down here. We've got our top wick at 49,800. Looking at the past 2 weeks, we've had very little volume, but a lot of volatility. Volume in the sense that we haven't really figured out our direction here. Today, equities are going to be a lot choppier, especially if you're trading like NASDAQ, US 30, or S&P 500. Equities right now are pricing in NVIDIA's earnings, which are supposed to come out after market close. So we're going to be a little bit more careful when trading US 30, especially as price is sitting closer to the bottom range of this entire range here. So with that, I have cutting right through the current support and then the previous resistance levels here on the daily time frame. What I want to see here is, yesterday we had this entire consolidation and then price broke below, made a massive bottom wick. We're still waiting for a potential entry, but as you can see, that price really never pushed all the way down into the support. So what I want to see here as we drop down to lower time frames is price holding on to a support here. Give me 1 second. You guys can see my screen, right?
No.
Oh, my bad. You guys can see it now?
Yes, thank you.
Okay. Yes, I was going to do annotations. That's how I figured that out. You guys should have said something. Alright, we had our 4-hour consolidation. Price broke below. Kept continuing down. We had the same exact levels mapped out right here, where price failed to continue pushing back down. So what I want to see is, with the 4-hour candles today and the hourly candles today, if we can actually break below this to continue pushing down into 49,100, and then hold on to a support here for a bounce back up. That is going to happen if we continue to get some more optimism from the FOMC meeting minutes. If we see that, well, we know that right now the market's pricing in NVIDIA beating their earnings. So all of that's going to help push back up bullish. But it's very important that we end up getting candle closures here. So we come on to the 1-hour time frame. This hourly is already extremely bearish, pushing back down. Massive drop here on the 30-minute candle, which is right when the market opened up. But no top wick at all. So that's why I want to see some candle closures here, at least on the 5-minute, 15-minute, and then a continuation. Massive drop here on the 5. So this is not something I want to enter right away, but I want to see some candle closures, so then we can position ourselves for a much bigger range trade that we can take. So while that is setting up, let's go over to gold. Come back to the weekly time frame, and we have our support formation down here. That bottom wick from this week, top wick from this week, and that is our range so far. Then we drop down to the daily. On the daily time frame, we're bouncing off of this previous support right here. You've got your consolidation as well. My main confirmation of buys is going to be if price can break above that, which is also this consolidation resistance and that previous resistance to the left too. Drop down to the 4-hour time frame, we're consolidating right below that daily support level that we just mapped out. So here I want to see if price can continue pushing. Give me a support or like a candle closure here first, and then a bearish candle closure or a pullback of some sort. Give me a support formation, and then continue pushing back up. I have a much cleaner range to bring that trade back up for buys into about this 45.80 area or even 45.94, 4600 area. If price just ends up consolidating here, then I know that it's going to be choppy price action. If anything, you're going to do a quick in and out scalp opportunity. That's pretty much it. Here, when you drop down to the 1-hour time frame, you see a retest, pulls back, retest pretty much into those previous highs, pulls back, another retest, but at each point, as candles are closing, we're creating those lower low formations. Right now, price is starting to push back down after a top wick on this hourly candle. On the 30-minute, already made a top wick, starting to push back down. So if you want to take a very quick scalp opportunity, what you want to see is candles pushing back below this area and then take it down, first target and then ultimate TP coming into 4460.5. Come on to the 15-minute, the previous 15-minute, close with no top wick, no bottom wick. This current one is making a top wick, so as it clears the lows and continues pushing, that is your sell opportunity. You check the volume on the 5-minute. What do I mean by that? You're going to wait for a 5-minute candle closure down here, and then you're going to wait for the next candle to give you a top wick. That way you're kicking out the buyers, and then you're also grabbing liquidity for that sell move to the downside, which gives you a clean move to come back down into 44.75, and then a continuation down to that ultimate TP. If you don't get a 5-minute candle closure down here, let's say this candle just makes a massive bottom wick and then pushes back up and closes bullish, that is still not a trade that I would take. I would wait for an actual candle closure, because that candle closure is going to tell me that we're able to close below this zone and we have enough bearish volume to continue. The next candle is going to give me my entry confirmation if it can create a top wick and continue breaking the lows to push back down bearish. So we're going to set our alert here for any buys for a quick scalp. Also, I'm going to wait for price to break its own 15-minute high, that top wick, and then continue pushing back up bullish. So nothing in between this range here. We come over to silver. Alright, so we come over to the weekly time frame on silver, and right off the bat you can see that price is sitting in this range. So I know that if price has been sitting here for 1, 2, 3, 4, 5, coming on to the 6th week, that it's not just going to be a quick break below this and then looking for massive sell-offs to come down here. I know that for a fact that this is just going to be my range. So that tells me that as I'm dropping down to lower time frames, I'm not looking for swing trades here. I'm not even potentially looking for a day trade here. I'm just going to be taking advantage of quick scalps, making my money and get out. So I have my top wick. I'm going to just map out that resistance pretty close to it. Then I'm going to drop down to the daily time frame. Now when I come onto the daily time frame, I see that price is holding on to this minor resistance, which is the top wick from the current daily candle. So here I also see that we're kind of just stuck in this range. There's no clear direction. With gold, we're seeing that there's lower lows and lower high formations. We see the same exact thing here on silver, but we also have price that continuously rejects down here. So if price were to push back down bearish below this 53 mark, then at most it's going to come down into this area, potentially grab liquidity just for a retracement back up to catch these moves back up. So right now it's bouncing off of that daily weekly support, which is a very strong level. I come onto the 4-hour time frame. We've had a massive sell-off from last week, and then we got a quick little retracement earlier this week, pushing back down yesterday in New York session, later New York session, A bit of consolidation on the 4-hour time frame going into Asian session and even London session. Now we're breaking the previous lows, drop down to the 1-hour time frame. You want price to clear below this, and you have your sell opportunities to come back down. Excuse me. You have your quick scalp opportunities to come back down. Buys are going to be above that $76 mark, mainly above that hourly consolidation. Sells are going to be down here. Let's come over to oil. Let's remove all of this. So same thing with oil on weekly time frame. We know that the main consolidation for the last couple of weeks seems to be here. A lot of the candle closures just seem to be in this level. So 1, 2, 3, coming on to the 4th week of just candle closures between this current weekly high at 105 and current weekly low, or even the previous weekly candle open at 98. Drop down to the daily. On the daily, we start to see that consolidation right there, right in the middle. We push back up. We're rejecting off of that 105 area. I want price to continue breaking its own low down here. As it breaks its own low, then we're going to see those potential sell opportunities below that $100 mark. Right now, there's a lot of this like geopolitical ping pong that's happening. Like yesterday, for example, right when the market opened up, the sentiment was being pushed out. Trump was saying that, give me 1 second. Trump was saying that I'm not going to do any attacks. I had military attacks planned on Iran for today, but the Saudi Arabia and the Persian Gulf allies told me, and they told me not to go forward with. They called me and they told me not to go forward with the attacks. So that was enough. Him saying that I had attacks planned for today to push that risk off sentiment that we have been seeing since yesterday, and then bring in a little bit more optimism that he was holding off on the attacks. And then about 45 minutes after market open, we saw headlines saying that even NATO is saying if you don't open up the Strait of Hormuz by July, then there are going to be like consequences. They're going to be moving forward with basically military aggression. Trump saying, I think Iran needs another attack. Iran's officials coming out and saying that we're ready to confront any military aggression. So there's a lot of volatility yesterday, and the market not being able to figure out what direction it wants to go into. So that's the same exact volatility that we're playing with today on oil as well, where price pushed back up, started consolidating, where these are all threats of that potential aggression. And then come down to the 1-hour time frame. Today, we're sitting right at that key level, around that $100, $101 mark, which is kind of the zone, the right in the middle of the zone, that we figure out that as soon as price drops, or there's some sort of optimism that, you know, they're holding off on the attacks, that we're actually going to maybe end up getting some sort of a deal, or Iran's even coming to the table to do a potential deal with the US, we see that oil drops. So the easiest moves here is just, we're going to wait for these lows here to be broken, and then look for those sell opportunities, just purely based off of the headlines saying that, you know, there might be a potential deal. If there's any talks of potential aggression and that US is going to attack, or Iran's attacking, or whatever it is, any sort of headlines hinting towards escalation, then we look for our buy opportunities. But right now, since hourly is consolidating, we don't have anything just yet, but whenever price does move, there is going to be a ton of volume. So that's the move that we're going to try to catch here. Let's come back up to US 30 real quick. Alright, so here we had that massive push down on the 30, and then came down and created a bottom wick right into this previous support. So that's why we're waiting for candle closures. That candle pushed all the way down, and then the next candle was trying to push back down, but it ended up closing bullish. So we're just waiting here for a little bit. We just had our previous 15-minute candle closure. This new one is forming. I want to see if it can continue pushing back up, but this candle also no bottom wick. So what I'm not going to do is take a trade on a candle, especially today when we have FOMC meeting minutes coming out. So there's a lot of market sentiment and anticipation trading that's going on right now of what is potentially going to happen with the FOMC meeting minutes. all the equities are affected by the anticipation of Nvidia beating their earnings, because if they actually do end up beating their earnings, then we're looking at billion, I think it's like 57 billion additional revenue that Nvidia would be getting if they actually went through with the deal with China and China opening up their economy and their markets to the American companies. So there's a lot of market sentiment trading that's basically happening today. So what we're going to do is we're going to wait for this. We also, let me just check, we don't have any other data points coming out today. No, that's pretty much it. FOMC meeting minutes. So I'm going to wait to see if there's going to be any top wicks, bottom wicks, and then look for a potential entry. Even on the current 5 minute, there's no bottom wick at all, which is the start of the new 15. I see the message of looking at NASDAQ. I'll look at NASDAQ here in just a second. Let me just get through some of these other pairs really quickly. Alright, GBP USD, same exact setup from the market update. Not much has changed here. You've got your weekly resistance, that top wick, and then your support. You still have your daily mid support level right here that the daily candle is bouncing off of. On the 4-hour time frame, you're seeing a support formation. So if you're looking for any scalp buy opportunities, you want price to break above this. But GBP USD, Euro USD, I would say keep them for swing trades. And then if you're scalping, then try to look for scalps on GBP, JPY, gold, US 30 equities. If you can't trade those, if you can't trade gold and equities, then GBP, JPY or USD, JPY. Because with both of them, they're moving off of, again, market sentiment, but the potential risk of Japanese authorities interfering again with the currency market, with the yen specifically, and now they have the backing of the G7 as well. So the moves are going to be massive. Same exact thing with Euro USD. You've got your top wick, bottom wick, same exact alert setup as our market updates yesterday. And then based off of the daily time frame, we have now tapped into a support. So even if you were looking for quick scalp opportunities, what you want to see, if price can continue holding on to a support here, is price breaking above this level, or pretty much the support level. Get out of all this messy price action that's happening here. Drop down to the 1-hour time frame. You see all that messy price action. For your buys, it's going to be above this 1.161 level. Give you about 50 pips. And for sells, you're still going to wait for 1.158 level to be broken. I would not take any trade when you're sitting at a weekly and a daily support. Let's come over to GBP JPY. Previous candle's top wick, since our current candle is still open. So we have that range. And then we have the current candles open, no bottom wick. So we have that as our support. Come down to the daily time frame, our zone right in the middle is that daily consolidation resistance that we are seeing here. So if you wanted to scalp this pair, what you would do is you would wait for price to break its own daily low and then look for that clean move to the left, which brings you down for about 121 pips. So you can see how that's a much bigger range within the weekly range compared to Euro USD and GBP USD. When you come onto the 4-hour time frame, again, a lot of consolidation. So that's why I would not be looking for a trade right in the middle of this. You have better sells right below the zone, or you have buys for 98 pip or 89 pips. So you have your buys right above the zone. So a much cleaner range on both sides. USD JPY. So in the articles that we're looking at yesterday with Japan's finance minister, they've made it very clear with USD JPY very specifically that as it gets closer to 159.5 or even 160 levels, then the risk of another intervention increases. We still don't have fully confirmed confirmation basically that this last push that we saw with 500 pip drop, that the Japanese authorities did actually intervene. It was a lot of speculation, but this time they made it very clear. They're like, 159, 160 areas for the yen against the dollar. There is going to be higher risk of that intervention. When we drop down to the daily time frame, the bottom wick from the previous daily candle. Also this consolidation support, that resistance right there. As we're getting closer to this, you're going to expect more volatility. Drop down to the 4-hour time frame. If you're trying to scalp this pair, you've got your 4-hour consolidation resistance right there. If you're looking for buys to take that right back up, you have about 35 pips to the upside. I would not be looking for a trade here, but you can narrow in your zones a bit more. That if price breaks below this hourly consolidation support, then you're looking for sells to come back down to about 11 pips and then continuation down to about 28 pips. But you have much better trades, I believe, on GBP/JPY. Alright, now let's go ahead and take a look at NASDAQ. Alright, NASDAQ, we have top wick from the current weekly candle, bottom wick from the current weekly candle, so 29,322 and 28,600. Drop down to the daily. You have your daily support right here, right in the middle at 28,800. Drop down to the 4-hour. So now here on the 4-hour time frame, we've had consolidation since about Monday. We've had the first 4-hour candle closure right above this. Now the current one making a bottom wick, top wick, kind of bearish, but still above the zone. This pair is going to move mainly off of the anticipation of what's going to happen with the earnings call today and the FOMC meeting minutes, but mainly the earnings call is what's going to affect this. So here, you're going to expect a lot more volatility. You're going to wait for about 8 more minutes, wait for the hourly candle closure here. The candles continue to close above this, you still have your confirmation that the buyers are still in play. Now what you're going to do is, as you're dropping down to lower time frames, trying to day trade this, scalp this, whatever, as price continues to hold on to a support, you want price to be able to clear above this. So what you want to see is candle closures right above this level, basically pushing back up, hold on to a support, continue holding on to support here, get some bullish candle closures here on the 15 minute, at least on the 15 minute, and then be able to break past that high. As it breaks past that high, you've got your support here and you're targeting the previous highs. We still have a lot of bullish sentiment. The expectation is that we're obviously going to beat the earnings. The guidance is going to be great. We just had China confirm and say yes to American companies to opening up their domestic market so that American companies can go in and sell. But today's earnings call is going to confirm that, whether it's just diplomatic optics that were basically going on and them just providing optimism, or if it's actually going to be a real deal. So that's what you're going to be looking for here. So you're going to wait for this hourly candle closures. We want to see how the next hourly candle starts forming. The reason why I wouldn't take a trade on the current hourly is also because there's no clear direction breaking the previous highs and lows. Anything else that you guys want covered before we hop back over to US 30 and start looking at some fundamentals?
No, pretty much covered everything, thank you.
Alright. Alright, we got that massive retracement here on US 30 now. Let's go ahead and drop down to the 15. We're coming up in the final 5 minutes of this 15 and this hourly. Alright, so we talked about yields in the market update yesterday already, where the yields are basically sitting at their highest they have been in about, 19 years? Yeah, so the 30-year yield sitting at their highest level, since 2007, 2008 levels. This is important because this is going to be impacting mortgage rates. It's going to be impacting, 3 decades worth of rates, which have hit now the same exact level that they hit back in 2007, 2008. 10-year yields also tapping into 4.6, almost 4.7 level, which is also sitting at those highest levels based off the weekly time frame. So all of this is putting even more pressure. Now there's no discussion of any rate cuts. It's going to be rate hikes that we're going to end up seeing. Now it's a matter of how soon can we see that. The market right now is betting that we might get our first rate hike as of December, but depending on what happens with the FOMC meeting minutes, we might get an earlier. So the market is starting to price in another one for October at about 20%. And these yields are rising purely based off of this inflationary shock that happened due to the war. And then we also had Trump yesterday saying that he's going to wait until early next week to see if Iran is actually going to do a deal. And if it doesn't, then he's going to continue with his military attacks. Let's pull up ES. For ES, sitting at all-time highs, drop down to the weekly to figure out your range. Are you scalping this, or are you trying to day trade this? Either way, you're still going to have the same exact range here. For the daily, you're going to have this zone. As price continues to break its own high, you have your scalp opportunities to the upside. For any sells, you're going to drop down even further to the 1 hour time frame. The 1 hour candle already made a massive bottom wick. It's the same exact thing as the US 30. Alright, scalping, day trading, perfect. For any scalps, you're going to wait for the previous highs here to be broken. You're going to wait for this hourly candle closure. As that candle continues to close, give me one second. What I would want to see here, let's tighten this up a bit more then. I want to see candles closing into the zone or above. If this candle closes below and the next candle does not continue pushing back up, if you don't see like a 15-minute, 5-minute candle closure above the 74.10 level, then there's no buy opportunities. For any sells, you're going to wait for price to continue breaking below this low support that it's formed. Now, when you drop down to the 30-minute, adjust that to sit right below this 30-minute candle. No trades in between. Drop down to lower time frame, 15-minute. You're going to wait for some candle closures here. The current 15, there's no bottom wick, which tells you that the liquidity grab happened on the previous candle with this massive bottom wick here. There's a very high chance that this is going to continue pushing back up bullish. To be on the safe side, I would set an alert at 74.16. If price continues breaking past that, you have those quick scalps that you can take to come back up into 74.30 and then 74.440 area. For any sells, you want candle closures down here. So you want a rejection here, bearish candle closure, come back down and close bearish. It's very important that today the candles close bearish below the zone and continue pushing, so then you don't get stuck in a situation like this. So you want a candle closure, you want the next candle to give you a break and retest formation, which is just a bullish candle closure still below the zone, and next candle takes you down. That push back up is going to be the last move of taking the buyers out, so the sellers can grab the liquidity from the buyers and continue pushing, or at least create a top wick and then continue pushing down. So you don't have any sells unless pretty much you clear down here. Sounds good? Alright, we have an hourly candle closure here in just a couple of seconds. Yeah, for sure. Alright, there is our new hourly candle. Gold has hit our alert, so here Let's go back up to the hourly. We got a candle closure right below the zone. We've already got a bit of a top wick here. I want to see if it can continue pushing its own low and break below that support. And first 5-minute candle, which is the last actually from the previous hourly. Here's a new 5-minute. So let's see if I can get a top wick and then continue pushing back down bearish, break its own low, and then we have some sell opportunities to take advantage of. Pretty straightforward so far. Any questions on the fundamental side, understanding market sentiment, or anything that we just went over?
Good. Thank you.
All right. If price can continue breaking its low, I'm going to look for a 1% risk sell on here and then save 1% for a potential US 30 trade. Alright, there it goes. Break the low, it keeps tapping to the low here and then pulls back. We have about less than a minute left here for this 5-minute candle closure, which is going to be the first 5 minutes of the hourly, which should give us enough top wick and continuation down. My only thing is just waiting for price to be able to clear down here. That's why I'm waiting for it to break its own bottom wick so it can clear below all this price action here to the left.
Makes sense.
We have not set alerts on US 30. So let's come back up, 4-hour time frame, 1 hour. Now what I'm gonna do is, now we got a massive retracement on the previous hourly. That's a new one just started forming. Now I can create my zone where I see majority of the price reactions, which is up top here. Bring that down just a little bit, just to see right on top of that previous resistance. Look to the left. Does it check out? Do I see a lot of reactions here? And that is the case. So what I want to see here is, for any continued sell opportunities, I want price to continue breaking below the zone. Drop down to a 30. 15, 5-minute, any of those time frames. Wait for actual candle closures. That's a massive break and retest that's forming here. So either we just stay stuck in this consolidation, or we actually get price continuing to push back up. What I would like to see for cleaner trades is going to be price pushing back up for any buys. Anything in between, it's a big enough range, but there's also, if I were to take a trade here, for example, my stop loss would be way up top there. And that's not a trade that I would want to take. Given that the previous candle, this was a really nice setup on this candle. And then this new one is coming right into the zone. The previous one closed at the bottom of its range. This new one barely made a top wick. It's a very high chance that we could end up just stuck in this consolidation unless price actually gives me candle closures below the zone or above the zone for continuation. Alright, there is gold. We are in. What is my price level? 81.55. Stops right there. This is my first target for almost 2 to 1, and then I'm going to hop back up to the higher time frames. If price continues pushing, my ultimate TP is going to be down here. But this is where I'm going to take some partials. So if that is almost my 2 to 1, partials could be anywhere between 1 to 1 or 2 to 1. So that's completely up to you, whatever you would like to do. Take partials here at a 1 to 1 or down here. But ultimate TP, I'm going to try to extend it all the way down if I get enough volume. So let's adjust this. Point 1. Stop is going to be at 400. Any questions on this entry? Just checking for other pairs if we're getting actual movement on any of them. We might get a potential move here on USDJPY. Nothing on silver yet. And nothing on oil just yet either. Alright, if you would take partials at 1 to 1, this would be your level. We're approaching that 2 to 1 level. Just a couple of seconds left here for another 5 minute, and then we're approaching into the final 5 minutes of this 15. So make sure you guys are definitely taking your partials, given that right now we're also trading in a very volatile environment that we are expecting reactions, massive reactions. So I'm going to take some partials now, and then I'm going to extend my TP down. Alright, we've hit that 2-to-1 mark. I've taken partials. I'm going to move to break even. I'm going to make it a risk-free trade. So I'm pretty much done with this trade. I will journal this as well, and you guys will have it on school so you can go through that. Oil is pushing for whoever's going to be trading oil. It's breaking out of this hourly consolidation. I would wait for this 15-minute candle closure above these resistance levels. Wait for the next candle then to give you a bottom wick and continuation back up. You don't want to be stuck in a fake out here. Alright, last 2 minutes. So I've moved at break even, but I'm gonna go back for my stop loss so then I can actually turn it up. But just know that I've moved to break even for this trade already. We're gonna wait for this 15 close and then we'll call it a session. Is there anything else that you guys want to go over before we're done for the day? And then we come back for the market update?
No, thank you very much. That's a good trade. I did take a little entry with you.
Nice.
Thank you, Vishay.
Yeah, absolutely.
I'm still holding on to my GU cell, believe it or not.
Oh, nice.
I'm just practicing, trying to hold
Yeah.
on to the trade.
Is this move right here, right?
Yeah, I mean, I'm risk free. My entry was at 1.3421, which was yesterday. So I'm just literally just trying to just hold on to it, but nothing seems to be happening.
What are you targeting? What's your profit?
I was just trying to target the bottom of the sort of weekly range, so back down to 1.33.
Okay.
I'm just going to manage it as I go on, but I'm just trying to practice holding on to the trade.
Yeah. What about your stop?
My stop, my original stop was at 1.348.
48.
And I'll break even, so I'll just let it just basically be a risk-free trade.
Oh, nice.
Try and hold on to it. Yeah, just practicing.
No, yeah. That's really good. Yeah, you got a solid 40 pips.
Yeah,
45 pips
I
out of
managed
it.
to get about 45 pips out of it, 43 something, but
Yeah.
I'm not close to partials or anything. I just managed to trade by going risk-free.
Yeah. No, that's perfect.
Try to hold on to trades a bit longer.
It gets very hard because we're like, because of the current market environment, we're so used to just scalping.
Exactly.
And then now you have to like hold on to a trade, especially on like a major pair like that, which moves so
currency,
slow.
Exactly.
Yeah.
So, yeah, it's a major currency as well, so it's not exact. It's a very stable currency to say the least.
Yeah.
It's a good way to practice holding on to the trades. That's what I was thinking.
And practice your patience and everything with it too.
Yeah. You know, is it US 30 and gold are like scalping sort of.
Mm-hmm.
Sort of conditions at the minute.
Yeah. Alright, perfect. Alright, we got our 15 close for the rest of the pairs. For ES here, just wait for your 15. Candle closure, wait for the next one to give you a top wick, continue pushing down, make sure you're clearing out of this. Alright, US 30, we're just stuck in the range, so that's where we're still going to wait. And then GBP USD, I think you're still solid. We're not taking any trades in the middle here. We have our alerts set. Same thing with your USD. If you want buys, you're waiting for price to break above. There's not much going on here. GJ, same thing, just waiting. USD JPY, you have your alerts. US 30 got an alert hit.
We just had a little headline.
Mm-hmm.
Come on. It was not updated. It's basically said the Pakistani army leader may visit Iran tomorrow to announce the final version of the agreement text.
Oh, perfect. We're getting optimism then.
It said the next round of negotiations will be held in Islamabad after their religious Hajj season.
Alright, perfect. So in that case, we're still going to wait for here the 5-minute candle closures, and then we're going to wait for a continuation back up. So don't trade on this volatility. You will literally end up becoming the liquidity for the market. Wait for the candle closures, and then look for your entry. With gold, also flipped back up, came pretty much all down here. Went from what, a 2-to-1 to almost a 4-to-1 trade here. So that was completely risk-free. We already took partials and everything. Silver's going to push back up too. And then oil is starting to drop. So that's like, the positive headlines thing that we were talking about earlier in the session. That's what this move here is. So don't try to trade the current volatility. Wait for your 5-minute candle closures. Wait for actual continuations. And then look for your trade opportunities. Sounds good?